Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, July 31st, 2024. It's 10:18 a.m. Eastern Time. I'm starting the video. I just want to get a quick one out to you and let you know what you probably have seen. I've been harping on this level for almost a week now. 467.83 and the comparable level on NQ. Like I said today, third time's a charm. We really had a fourth reaction. We dipped below it there, had a little reaction there, and as expected, a breakout today. So finally, we got it. Came off an even bigger divergent low than the previous divergent low, which then sets the stage for potential. I'm very open to, obviously my minimum target, or it wouldn't be a minimum target. That just plan to sell just shy of that 473.91 and the comparable level on NQ. Get a reaction there. Certainly potential for a backfill, and all along I've had these, so that's my maximum kind of target there, and I'm very much open to it. But remember, this is, as I said yesterday, and quite a bit, the biggest week, of the year, barring, of known events, things that are predictable, and that is the vast majority of the, not just the big earnings, and that's huge. That's right now bigger than anything. Remember, Powell's on deck. The Fed's meeting, they conclude their meeting today at 2 p.m., make the announcement, and then Powell will do his dog and pony show at 2:30 p.m. I wholeheartedly expect he's already reverted back to, years ago I called him the scorpion, from the Aesop's fable, the frog and the scorpion. If you're not familiar, read that one and you'll see why Powell's a scorpion. It's in his nature, and he's reverted back to his dovish self. So we know he's going to cut. We know it won't be this meeting. Probably the next meeting is, I believe, what I haven't even looked, but I know that's what they've been talking about a while ago, and that's what I see. So he'll just kind of lay the groundwork, kind of solidify the rate cut. And anyway, so that's that. In other words, I don't expect him to poo-poo this rally. Anything's possible, but if anything else, I think the market will like what he's saying. But let me reiterate, and I made some comments. I replied to a couple comments today, this morning. Nothing's changed on my longer-term outlook, where we're going, or my near-term. Near-term up, long-term down. I'm going to ride this one kind of close today. But as of now, we've broken out. I'm going to go over those levels I showed you. Just sorry, hit the mute button or pause button. Touch on again the earnings counter. So we have again today, 2 p.m. Fed announcement, 2:30 press conference with Powell. Tonight after the close, Meta. Obviously, there's some other ones in there as well. I'm going to get to this in this video. A lot of semis I had hit support. Shame on me for not going over. I told you AMD was reporting, and I would have, if I looked at the chart, would have told you I would have bet on it. I would have gone long AMD yesterday. I didn't. It's up big today. It's beautiful drop to support. That's where they reported. I always tell you, if a stock is clearly, if I can make a case to clearly go long or short, that's the direction it's probably going to go after earnings. So that's what happened. And the other takeaway, look, for those of you who followed me for a while, you've heard me say this so many times, you're probably sick of it. But I always say, don't ever read too much into the initial reactions following an earning report, the market's initial reaction. And so Microsoft, undoubtedly, you get a bunch of probably retail traders piled in SQQQ on Microsoft's post-earnings drop. Went right down to support, by the way. But again, it's not the initial reaction. It's quite often not the lasting reaction, the one that sticks. Now, do I think Microsoft's heading down in the coming weeks and months? Oh, a whole lot lower. It's just kind of near-term stuff. So anyways, all right. So Powell today, Fed today, Meta tonight. This is the earnings calendar, again, accessible under resources on the right side of the chart on the top menu. Under tools of the trade after you go into the resources area tomorrow morning right there. And then Apple and Amazon and Intel, really Apple, these two take it home this week. And so you have that a lot of stuff going on. So we're going to look at those real quick. I kind of want to do a cursory update on the market. So again, just, this level's been harped on so much for over, going back to last week. That's it. So we broke out. That increases the odds that we'll go up there. Now, that's where, I said to someone, if that happens today, which I could see it happening, quite possibly, remember, you're going to get some nervousness coming up to 2 p.m. today, most likely with the Fed. But whether it's today, tomorrow, next week, if it happens today, it's going to be about a 3.6% rally. I'm not sure that's a lot of oomph for the NASDAQ. You've heard me say it recently and many times over the years. When volatility expands, as it clearly has, volatility cuts both ways. And I've always said this, the biggest up days in the market come during corrections and bear markets. So, a 3.6% rally, although that's huge, that's on the upper end of what QQQ will do, is not out of the question. Probably get halfway point here and you get some profit taking, maybe around now, maybe come back test the breakout. But either way, we've broken out. And like I said, maybe some nervousness today, maybe not. Maybe the nervousness is from the shorts covering. I talked about that. Yesterday, showed you a lot of volume coming into SQQ and the other index shorts recently. So that's it. Either way, you can, we can make it as complex as we want or as simple as we want. This is breakout. As long as we hold above there, there's today's lows. Obviously, any back tests of the level you'd want to ideally see hold above there, and that opens the door for that. And not today, but maybe depending on what. Obviously, I would tell you it's most likely going to depend on what Apple and Amazon do. If we're going to get up here or even higher than that, it's going to take a favorable market reaction to Apple and Amazon. Why did I say not good earnings? Earnings don't matter. They never have. I've seen time and time and time again a company blow the cover off the ball in earnings only to see the stock peak and market top or start a big correction. And likewise, I've seen them miss by a mile, and that's the bottom of the stock or the stock rallies in there. So again, it's the important thing is the market's reaction to earnings, not the initial reaction, the one that comes out of the, emerges over the next few days and then a couple of weeks. And the charts will tell us that. You can, again, I'll factor in fundamental analysis. You hear me talk about fundamentals all the time, AI, all this other stuff. But at the end of the day, they're great, if you're Warren Buffett and you got a 10-year horizon, but you can't trade actively on fundamentals. You can only use the charts to get you in and out. All right, so that's QQQ. There's the breakout. NQ level. I've been focused on these 15-minute charts. Boom, 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 breakout. So, if they come in and back test it, today's low. Remember that 19,300 I've been talking as well. It's also a level that's been acting as resistance, and so that's support. And that, by the way, if you're an active trader today, you could have, we opened right here this morning at resistance, both on QQQ. There was an easy fade that one last fade there and recycle back in on a pullback. You can see the 1930. I don't know if you can see it there. That's where they stepped in and bought it this morning on the post-opening drop, because that was the one last hurrah into 19,387 or 19,390 before the breakout. So that's it, guys. So like I said, I don't expect Powell to do anything that's going to spook the market. If anything else, invigorate those that have been waiting for the rate cuts and all that. But make no mistake about it. Like I like to say, driving with one foot on the gas, one on the brake. Whether this is today or tomorrow, that's still my trading plan. Get up there, reverse, and coin toss odds. I'm almost leaning towards, because of some of the levels I'm going to get to in a second. We hit maybe those upper higher targets. It shows better on QQQ. Let me go over to QQQ. Let me look at a 60-minute chart. I've been focused on this 15. You can go to a 60 here, and you can pull this downtrend line off the highs. And again, this is a level I told you, kind of my minimum target there, and max. You have that gap right there. I can pull this trend line up too. I can draw it different ways. I can come here and capture this reaction high on that candle and put the trend line right here, in which case that's probably about where we'd get to. So just kind of, again, it's the top of the gap right there at about, I'm going to round it up here. That's about right at 480. Max bounce target at this point in time, minimum bounce target, and this can all change on a dime. If I see anything that convinces me otherwise, let me now rifle through the rest of the stuff here. Let's talk about the big stocks. Apple. Here's Apple. There's that uptrend line I gave you recently. Boom, hit that uptrend line. Biggest pullback in a while, and rallying off there. Got some resistance right here. Little micro levels. But right now, shorts are getting squeezed out, especially those that piled in last night. Um, let me look at the daily for you. Daily, coming up to back test the trend line. Microsoft on the daily, still very bearish, even though they gobbled up a lot of their post earnings. Post earnings, I think it was all the way down to, these are all the levels I gave you here. I'll turn it on. I think we hit almost perfectly my 387.48 support / target. Let's do it this way. Pre-post data, show last 2 sessions. Look at that. Look at that candle. Boom, right there. And so those that shorted Microsoft or the market have just been roasted. That's a huge recovery. Now, with that being said, this is still a very bearish chart. Nothing has changed in my coverage of analysis or what I've seen in Microsoft. Breakdown impulsively, perfect back test. I'm talking to the primary uptrend line, and a rejection. So we're still down today, and far from recovering the trend line. And so, we hit this level, we took out the 200s all in pre-market, but that doesn't matter as much. So I think we're still getting down. We're going down there. It's just a matter of, it'll most likely it doesn't have to bounce in sympathy with the market. So far, it's not today. It's the only red. Here's my, I'll drag over, show you these are the top components of QQQ. I always sort them on this watch list by weighting. So this is the biggest company. So you can see the only red stock I have right now is Microsoft and VRTX. VRTX is flat. That's the top 20 something, 30, whatever components in QQQ. But anyways, that's still a bearish chart. So trying to thread the needle here still, guys. That's, like I said, not a lot of tremendous upside in the market. So I won't be, who knows, man. I might try to eke out the last couple pennies. But I do plan to start soon. And I answered this. Somebody said about re-entering. I told you on not gut feel, but instinct and experience closed out those puts, which I told you I was married to when I reversed last Friday, was it? Thursday, started reversing, covering shorts, going long. Told you that I was holding on to a core short on NVIDIA via puts, and told you yesterday I actually decided to close those out, and that was a very wise and timely move. Told you, despite it breaking down, and by all accounts or most accounts, that was a clear breakdown of that second target zone, the bottom of my support level. But during the video, I showed you we were right at that top of this gap right here, this gap back here I'm talking about. And that was perfect. I sold those things right at the lows yesterday. They were up huge, and this stock's up 13% from them. But look, right back to a trend line. Somebody asked this morning, hey, you looking to get back into those? Actually, I said no earlier. We were here now. Yeah, that's where I wanted to see it go. So I actually normally this happens a lot. I do these videos and I sometimes miss objective entries and exits where I should be. But yeah, that's where I should be adding some back. I'm going to hold off for now, and that's what I said in here. Again, because to expect more upside in QQQ is to expect upside in NVIDIA. So it is objective. I'll say that now, and I may I'll wrap the video up, and then I may just start scaling back into it. It could pop the trend line if it does go up a little bit more. Again, I've given you potential higher targets. I have a minimum target, and I've been very clear on those words: minimum bounce target on QQQ and kind of a max bounce target. So that's a range to start scaling back in. But again, the takeaway too, and I've been saying this is the max volatility week. You got to expect these swings. Again, when was the last time you saw NVIDIA up 11%? It doesn't come in a bull trend. It comes in corrective mode. So this is the nature of trading, especially during this week with all these earnings and the Fed. So that's it. So if nothing else, if you hopefully these are the little things I've learned over the years, painfully. The trading is years of costly lessons you learn. To start to recognize when you can anticipate volatility before it even happens by just going through these cycles. And then also adjust your trading accordingly. What does that mean? Well, also, if you're going to trade this week, long or short, I've been repeatedly saying, you can't be too heavy unless your confidence is very high. You can get in on a day, but going home at night, especially if you're trading shares where you can't control the reversals on the futures. There's a great example. Okay, here's a video. Here, let's do QQQ. I'm kind of going off on a tangent here, but try to pass along these things I've learned over the years. So there's QQQ. You closed here. Let's say you went home short, and you said, you know what, I'm gonna set a stop right here in case this market does reverse and these divergences play out. Well, guess what? You have two types of stop order. Stop limit that says sell me at if QQQ hits 460, but only at 460. No worse. I want that. That's my fill. That's a limit order. Will not cover you. I'm sorry. A buy to cover order. Won't cover you a penny over 460. Only if 460 is hit, it'll cover you at 460 or better. That's how limit orders work. You can get the limit order price or better, whether it's long or short in reverse. And then you have a stop loss order. Stop loss order says, okay, if a QQQ hits 460, stop me out, and instantly converts to a market order. So those of you that, just in this example, if you had a stop loss order at 460, good to cancel. Guess where it filled? Not at 460. You gapped up here, that huge monster gap today. It filled at the open, in line with everyone else's orders. Because again, once the stop price is triggered, meaning any move at 460 or above, then that it turns into a market order. So that was at 9:30 a.m. today. And you might say, oh, well, I'll trade after hours, Randy. Well, they don't use stop loss orders, only stop limits. And so what happens too is a stop limit, that's the only one you can enter, gets bypassed. If it didn't trade at 460, it didn't sell you out, cover you. And so you woke up to a big gap that's now bleeding and continuing to bleed losses. Okay, so what's my point? Well, that's what futures are for. It's one of I trade them for the tax reasons and liquidity, and this reason alone that if you were decided to roll the dice and go home short last night and you had a stop loss order at that same comparable level, well, there's plenty of liquidity overnight in the after hour evening session, 3 a.m. And you can use stop loss orders. You don't have to you can use stop limit or stop loss. So it would have prevented that waking up to a big loss. So anyways, that's that. Let me finish on the big fangs and I'll just update. Crude oil's ripping. We got a good entry there yesterday. Hopefully some of you caught that. NVIDIA just covered. Alphabet. Oh, let me go back to the daily chart and show you what I've noticed here. So Apple, Microsoft, I just covered. NVIDIA, I covered. Alphabet, big old gap right there. Hit that right to the low. These, again, levels that I've had on this chart. And that one was hit just yesterday right there, that gap. Amazon, Amazon still, look, these guys are still just broken down. Again, I'm just picking up nickels in front of a steamroller here. Well, this one will head lower. This rally, whether it ends today with the Fed, tonight with Meta, tomorrow with Amazon, Apple, or into next week. And somewhere, that's the range. I'm looking at hours to days here, guys, is what I'm looking at on the bounce. Hours to days, literally. Anywho, there's Amazon, there's Meta. Meta hit this support level here, had this one quite a while, 456, had an intraday break, closed, parked right on it, still above there. Remember, they're scheduled to report tonight. Tesla, still covered that, couldn't hold that on a weekly closing basis. Remember, rejected on the bear market downtrend line, still below it. So in summary, intermediate to longer term, these charts still remain bearish to me. Just near term, bullish due to the technicals, support holding, breakouts of short-term levels, positive divergences, oversold conditions. We're still coming off a market full of hopium. This AI bubble is just things I and some others have been saying. All of a sudden now the bobbleheads on TV are talking about it. All of a sudden, oh, maybe AI, maybe these big tech companies are spending too much on AI. Maybe they're not seeing the returns. Duh. And now, so that was the narrative lately after they dropped, after NVIDIA's down 20-something%. That's when they come out and start telling you that. All right, but here's what I wanted to show you. A lot of, as I go through here, let me go to the semis. So semis itself, these are levels I've given you on stocks. Remember, we had a bearish engulfing. That was a short entry there. The bearish engulfing with a stop above the high. Semis dropped right down to that 1835 target, 17% drop. But that's good support. It was a level I've had here. Created that line back on, might have tweaked it. I don't know if I moved it, 726. But either way, it's all this support right here, resistance support. Now we're still going lower most likely. divergent high. It says so and everything else. But when you look at the shares, the stocks, Taiwan Semi, that one broke down. Obviously, these are all longer term bearish, just short term. There's some in here, quite a few that I had, including AMD. Here's AMD. Let me see if I have a previous chart of AMD. Let me just. Okay, no, so I don't have any screenshotted charts that I posted, but I've covered it in multiple videos. Up here we had a divergent high, bearish engulfing candle, and an island cluster top. that's like the what do they call it, trifecta of like short entries there. Island cluster, you have three candles separated by gaps on both sides. You have a bearish engulfing, the last candle in that island, and a big divergent high. And from there, from the highs, the stock dropped 40%. So, okay, to say it's oversold, be an understatement. You had, as you can see here, I don't know where that other line went yesterday, positive, aka bullish divergent. There's just, again, I miss it because I wasn't watching it. I knew they were reporting. That's a trend line I've had here created that trend line back in 2023. It's the uptrend line off the lows. It's the primary bull market uptrend line for AMD. It closed on it yesterday, right before they reported. It had positive divergence. And look where it popped. Again, level that I didn't just add there, created that back on April 19th. And that's a pop target. This is where, again, hindsight stuff. But I'm just showing you because the takeaway is you can replicate these kind of charts. That's one I would have bet up after earnings. It's up 14%. Was up a little higher, but right into that former support, now resistance level there. Also, look at this. It took out the 200 days. I always talk about those are big levels for tech stocks, especially. This was a test of the 200s, the red and the blue line, simple and exponential moving averages. Took it out, and it's back testing. So that's it. So it popped. Could go a little higher, could back test this trend line. I wouldn't step in just yet, although you certainly could. I mean, that look on a scale 1 to 10, that's an objective short entry. All day long. And so actually, as I do these videos, I look at the chart, the more things that I see bouncing back into resistance, the more it's going to make me want to close longs and or start getting back into shorts. And the last thing on that, let me just, look at Qualcomm. Perfect kiss of the 200-day moving average, the exponential there, and a nice bounce today. The final thing is, again, when you're looking for just a relatively small bounce, sometimes you want to thread the needle and try to get every little penny. But it is prudent to start reducing long exposure and scaling back in, not a hard reversal. And that is most likely what I'll be doing today is starting to close out some longs and maybe even selectively and strategically re-enter certain positions. Like NVIDIA, I just showed you resistance. Like AMD at resistance, and maybe it's time to start starter positions there. And again, I'll do a follow-up to this video later. Let me see if there's any other. There were other semis I know there I saw yesterday. I'm just clicking on the watch list of the components of SOXX. Look at this. ASML, monster gap. Blind man could see that gap. So traders trade off these gaps. They bought it here, they bought it there. This was off that divergent high. It was a textbook short. Again, these were all covered in recent videos, these semis. Gap down, blew down there. A drop of 22% in very short order to not just gap support. This is 10. On a scale 1 to 10, you have beautiful, very well-defined, it's a huge gap, massive gap support where they bought before to help validate it as support, not just the fact that it was, excluding that little candle. That's where the buyer stepped in. It's also the 200-day moving averages. Look at that, right down to the 200 simple moving average. We had 1, 2, we were testing the 200s here, the 200 simple for several days, almost a week. And so this is just a reflexive bounce. This is the evidence is there that the top is in and that nothing goes down forever. And what happens is nobody wants to short here in the bearish rising wedge, even though it's highlighted as an objective short. They didn't want to short the gap down because it was too big, but this is where most people, what I call the JCL start stepping in. And then by the time they're shorting, it's too late. For the initial drop is done, then you're going to have that initial counter trend bounce, short covering rally and all that, and then the next leg down. So this is where where it'll be, in my opinion, within the next couple months or so here, down to 76.22. And there's AMD. AMD will ultimately lose the trend line. You know, again, I've done these videos and go out to the weekly charts. There's the weekly right there on AMD. Again, divergent high. This is just the initial test for in a while of the primary uptrend line. So once it goes, your 200s have gone, then that opens a door for these deeper targets. Same on all of these guys. NVIDIA too. You know, you have my long-term targets on NVIDIA. And that's where, you know, I'll be looking to position for, you know, the next leg down. And depending on what happens in the market, we may, you know, we reversed a little shy of this T1 on the weekly so far. And I could see us going down through there. We still, bottom line is, we'll see. We'll take it day by day. But this, when this trend line goes, that intersects with T1, that's going to open the door to T2. And that's going to be a more powerful sell signal and take us down at bare minimum down to T3, T4. This is still a potential fifth target. This potential means this is my current final target, T4 down here. All right. That's that. Like I said, there's quite a few. I didn't go through all the semis, but when I did this yesterday, I noticed quite a few at support. Either 200-day moving averages, price support. There's Micron, Lam Research. Look at them all hitting the 200s. Remember, I've been calling a lot of things, including the markets down to the 200s. Semis have now hit it. Buyers are going to step in here. Again, this is just, you know, stuff that just, it's as old as the hills. People, they buy the 200s in a bull trend. Their support, again, the red or the blue. I use both. 200s exponential. Blue's the simple. They were buying the exponential here. They bought both of them here. Both of them coming together there. And when you're in a bear trend and you're below them, that's what the traders do in reverse. Once you break them, like you did right there, you short the kickbacks to the 200. You short the kickbacks to the 200. You short the kickbacks to the 200 until the 200s are recovered, clearly recovered, which they are. Then you start buying the pullbacks. Simple stuff, guys. It really is. Now, it's all the better when the indexes are there too, and the more, you know, if it's just one semi and one semi out of the whole lot of them falls down to the 200s, is it going to bounce? Maybe not if the rest aren't there. But when, as I've just showed you, when you have the vast majority coming down, checking the 200s for the first time in a while, even if I do believe, as I do, they're going to go through those, take out those 200s. You know, when the vast majority are all hitting support around the same time, be it price and or moving average support or Fibonacci's, you're going to get at least a reflexive bounce. That's all. So that's what's happening today, and you know, it's evidenced by SOXX being up 4.6% right now. All right, I'm going to wrap it up here. I just want to get the video out to you guys. That's where we bought crude yesterday. Nice pop. Took out the downtrend line, coming up for a back test. If you happen to miss it, coming off a divergent low. So any pullbacks to support being right here at about 75.54. You know, blew right through those targets again because it's a, you know, ETN that's tracking the crude futures. So we're up, you know, already, you know, 3.5%. And this is it. So started highlighting here the other day, said love to see it here. That would be an objective long entry at 74.88 right there. That support, we got it. Fired off as a trade idea yesterday, and that's a good 3.5% pop so far into the highs. You know, hit T1 overnight, and this is T2 zone, so it's still, if we get a pullback to T1, remember we ripped right through T1. T1, former resistance, now becomes support. That would be an objective entry, add-on, or re-entry, and then up to T2, and potentially, you know, we'll see where this trend line, they could come in together. And at this point, it's prudent at very least to raise stops to, you can keep, you know, if you want to keep a stop below the recent lows, or raise stops to protect profits, or set stops at break even. That's up to you how you want to trade it. All right, guys, I'm going to wrap it up here, get the video out to you. Remember, volatility cuts both ways. Maybe Powell doesn't give the market what they want to hear today. Maybe Meta doesn't. Apple, Amazon, I don't know. I've already, you know, played the game of calling them down from earnings, but now we're kind of in the sloppy part of it. But post earnings, you know, again, not the day of, not necessarily, but, you know, in the weeks to come, down Apple, down Amazon, down Microsoft, down all of them. So yeah, if anything, I can almost tell you now, right now, tomorrow's app on Amazon, I will most likely be going home with a net short market exposure tomorrow and possibly today. All right, let me wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.